Welcome back to the Wealth Outside of Wall Street channel, my friends, where you learn to get your money off of Wall Street into your hands and retire in 10 years or less. Now, today we're going to be reviewing one of my very favorite mentors, not really, but I'll be honest with you, when I started my path to trying to figure out how I could ultimately retire early, this guy was the very first guy I started following to try to determine, can I take more control over my finances? So it's none other than the man, the myth, the legend, Jim Cramer. Let's see what Jim Cramer has to say today about getting your wealth into Wall Street and why that might be the best thing for you. Let's go.
To make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Mad Money from the madman himself. Let's go.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I thought to make friends. I'm just trying to make a little money. My job, not just to entertain, but to explain. So call me at 1-800-743-CNBC. Tweet me at Jim Cramer. At the beginning of the year, brokerage houses love to name their favorite themes for the next 12 months. Usually,
all right, so here's where we're starting off, okay? He rings the bell, he's gonna teach you how to make money. Listen, my friends, there is a very principle-based approach. I think one of the reasons that making money eludes so many people is they're going to follow exactly, I guarantee you, what Jim Cramer is gonna now tell you, which is a trend, not a principle. A trend will only give you results for a period of time, and you're constantly chasing what's the next trend, how do I see into the future. A principle, just like gravity, is a universal truth. And the principle of making money is dollars follow value. Whoa. And ask yourself as we go through this, are you, the investor, actually creating any value, or are we just trying to follow trends? Let's get into it.
just look at what stocks are going up and then pick themes that fit. It is pure artifice, people. Not the best way to go about teaching or making predictions. But they're told to do it, and theirs is just to do or die. Me? I like to lay out themes you can fall back on all year. Themes that you buy on the down days. Like this one where the Dow shed 94 points, S&P tumbled 0.56%, NASDAQ dropped 0.59%. And again, at one point it was down a lot more. But people keep buying these.
Okay, here's the crazy part. So Jim Cramer's starting off with fear. He's trying to get you to be afraid of the market, and only he has the guru inside to give you the ability to pick the right theme. And if you pick the right theme, then maybe you won't experience all of these downward trends that he's showing you to start off. It's just so fascinating. So let's keep going. Maybe Jim Cramer can turn that frown upside down. Let's see what he's got.
Intraday dips. They can't resist.
I do like the sound effects, Jim.
There's a reason I've been telling you to have lots of cash on the sidelines. Something I've repeatedly stressed to the Investor Club, and I'll tell you, the Investor Club people seem to respond pretty well to it. You need cash to participate when stocks get put on sale. And if you understand the themes behind them, you won't get shaken out by a bad tape. You'll use it to your advantage. You know what it's like? It's like kind of having a map when you're engulfed in the fog of war. So let me give you my favorites. They're a little different. My first thought is a theme grafted on to an observation. Obviously, given the strength of
a theme grafted on to an observation. So we're gonna make our retirement picks, our financial freedom picks, based on a theme grafted onto an observation by the ramblings of Jim Cramer.
What? Bro, what are you talking about, man?
Come on, Jim, let's go.
Gives in 7 coming into the year. Everyone's going to have an opinion about whether they can keep running. Me? No. I want to cue up the Elmer Bernstein score, put on my best Eli Wallach face, huddle with John Sturgis to figure out which of
the Magnificent Seven. This is actually crazy. The Magnificent Seven are the 7 highest value companies that, I mean, it's all tech-based companies, but it's tech-based companies that are now worth billions of dollars, and these make up the majority of the gains in the S&P 500. Let's see what Jim has to say about the Magnificent Seven.
The 7 is going down early.
Ooh, he's calling for the shot. It's going down. Tech-based companies going down. I bet it's going to be Tesla. Let's see. I've not watched this yet, but I bet you anything he's going to call it Tesla. Let's see what's going on.
The character played by Brad Dexter, who gets shot pretty early in the scuffle. I mean, who's to say we need all 7? Only 3 survived the movie. To me, it's looking a little like Tesla will be the first to fall.
Oh, I just called it. Come on, Jim. You and I, we're prognosticators. Let's go.
I guess
everybody loves to hate on Tesla. I don't know what it is.
Go yourself. Is that clear? I hope it is.
I mean, you know, the crazy part about it, Musk comes out and talks all the politics, and now all the stockbrokers are trying to bet against him. I don't know. And here's the craziest part. Like, this guy has been one of the most successful business owners, entrepreneurs, innovators, inventors ever. He has a cult-like following. I was just on the phone with someone today who's been waiting for years and years and years to buy that Cybertruck, and he's finally able to do it. So I don't know. Tesla, their shares are down right now. But again, guys, can you see what we're doing? We're sitting here talking about themes. We're talking about someone's personality. We're talking about Jim Cramer's ramblings and why you should be able to pick and choose. Now, I did like where Jim Cramer started out.
Are you serious?
You should have a lot of cash on the sidelines, because if you're going to be betting, that's the only way you can continue to bet, is that you can fund your losses long enough that you have an upside win. So let's see what Jim says the win is.
Percent be the richest man in the world. Elon, bad look. I know he identifies with Inigo Montoya from The Princess Bride, aka Mandy Patinkin. But to me, he's about to be taken out by Calavera, Eli Wallach's brilliant bad guy in The Magnificent Seven. Just like in the movie, The Seven Were Never Buddies. Did you know that? First
I don't even know what we're doing right now. There are some good sound effects, but what are we doing?
To rescue the villagers, but to find a hoard of gold. Now, just to switch metaphors a little, he's kind of like the Dobbsy figure in Treasure Sierra Madre. Yeah, Bogart. So is Musk, it's kind of like Dobbs and Harry. I mean, really, can you imagine, just humor me, can you imagine Jensen Huang coming on air and saying he needs 5 times his current holdings if he's going to do some super duper generative AI? I mean, can you imagine that? Pure hubris, which is why Tesla might be the first to exit the 7. Of course, Tesla lovers love none of this. I get a piece of research today that says that Apple's going to have a terrible quarter because of a slowdown in China. The uniform nature of this view is so ingrained that any Apple analyst who's watching is captain that I...
Okay, so now he's gonna talk about Apple. Apple is slowing down in China, and that may or may not be true. But again, now we're betting against some of the most successful, iconic companies in the entire world. Now, whether that's good or bad, here's the thing I want you to consider. I mean, consider this for just a moment. We are betting right now your future. You are betting dollars that you've already traded your time for. Those are the same dollars now that you are wanting to use to buy your time back. That's the whole concept of retirement. But yet we are listening to a madman ramble about mad prognostications in 2024 that may or may not make you rich. Now, what if he's wrong? Maybe things don't slow down in China. Maybe things do pick up in China. What if maybe Elon Musk isn't the crazy guy who, causes everything to fall apart? What if he's wrong?
I think your brain has a thick candy shell.
Your brain has the shell on it.
Are you talking?
Shut up, Richard.
What if he's right? How would you know? You have to simply make enough bets and lose enough bets to be willing to win one and hope that the one you win big on. So my friends, if you want to build your retirement based on bets, then build your retirement based on bets. And here's my bet against that. You will never actually be able to retire. And even if you do, you'll never be able to stay retired, because bets have a funny way of working themselves out. What is the saying in Las Vegas? The house always wins. You can't bet something that you don't understand for long enough to have a consistent winning streak. The only way you get a winning streak is when you back your financial decisions, not based on prognostications, not based on hype, not based on emotion, but based on real, tangible, principle-based decisions. And here's what I want you to consider. The backbone of the American economy isn't actually the 7. The backbone of the American economy, consider companies like Ford. Ford's been in business for well over 150 years, and they continue to produce goods and services, things that people actually need and want. They're not part of the 7, but think about that. Would you rather give up your cell phone, or would you rather give up your transportation? Now, maybe one is ubiquitous with the other, but here's the reality, my friends. Betting isn't ever going to get you what you want. However, if you can understand what real human needs are and invest in those human needs, think about this. Think about the Maslow hierarchy of needs. So the very basic needs are food, housing, clothing, transportation. Those are the very basic needs, meaning every human being in America and across the globe needs those things. Does every human being across the globe need a Tesla truck? I don't know. But do they need a mode of transportation? Do they need a place to live? That's why making your investment decisions in alignment with real principles, with real human needs. This is where we go back to the very beginning. I said dollars follow value. Your investment dollars, your returns are going to follow the value that you can actually create in the marketplace. When you're buying and selling shares of stock, you're not creating any value. You're riding off the backs of the value of Tesla, of Apple, of Amazon, and the other parts of the Big 7. You are not actually creating any value. You're just trying to time the market and make profitable bets on someone else's value creation. However, However, you are on the Wealth Outside of Wall Street YouTube channel, which ultimately means when you can buy an asset by getting your money off of Wall Street, what if you bought a single family home? Just consider that simple reality. What if you bought a simple single family home and you rented it out to a family? And when that family moved out, you rented it out to another family. And when that family moved out, you rented it out to another family. What can you probably guarantee? That the house is always going to be in demand, that the house is going to rise in value as housing remains a constant and continuous need across times and generations, that the IRS is actually going to say, hey, good job, because you're creating value, you are going to get tax advantages and deductions. They're not going to say that when you bet on Apple because they don't care. You're not creating any value. This is how the game of investing works. You align your money with a real human need that creates real value in the marketplace, and you let time work for you instead of against you. This entire strategy that Jim Cramer is going to talk about are the themes for 2024. He's trying to position you against time. Can you make the right bet at the right time to win the market and get out fast enough to hold your gains? Don't bet against time. Bet with time. Invest with time. Let time make you wealthy by aligning your money with real value creation assets. All right, so just to give my boy Jim Cramer just a little bit more of an opportunity to win your hearts and minds, to help you buy your future, let's see what he has to say about Apple. Maybe this is the pick of a lifetime. If you pick it right this time, you're gonna retire in just a couple of months. Let's see what Jim says.
Been chosen Apple to fall from its horse first. But then again, apparently Robert Vaughn begged not to be killed first in the movie. So who knows? Maybe we're gonna end up with 3 amigos or something. So I'm not looking for the 7.
Are we watching a movie or are we listening to Jim?
I'm looking for the others to join the 7. Ideally, we need about 300. 300 Spartans worth of breath from the SP 500. But we're not gonna get that. Still, it's far more likely that the makeup changes. That's right. Even I suspect the 7 will always be uniquely tied up with AI. Second theme, the election. Now, I keep hearing this is an election year. In election years, the market typically goes up higher, for president. Actually, I'm not that sure. I think there are elections, and then there's this election, which is highly unusual for reasons you don't need me to explain. I will say, though, that there's never been a president more friendly to the stock market than Trump was. He measured himself by the Dow. Maybe he should use the SP 500 for a broader yardstick.
All right, Jim, I'm sorry, dude. I'm sorry. I can't even take it anymore. I don't know about you, my friends. How can you watch this and have any confidence whatsoever in your ability to retire? Now, I get it. If you're just throwing everything on black and hoping to win big, man, this is awesome. Might as well go to Vegas. I bet you have just as good, if not better odds there. But here's how I want to close out this video for you, my friends. Look, when I first started deciding to get my wealth off Wall Street, I stopped funding my 401k and I dove into the world of alternative investing. Now, I didn't know what that world was, and it's a deep, dark well. But the very first person I came across was this man right here, Jim Cramer. I bought his books, I bought his course, and every single week I would listen to this dude give me the latest, greatest stock pick for the day. How to short this one, how to buy this one, how to time the market here, how to understand politics and global markets and interest rates. And I did have some wins, I did have a lot of losses, but here was the bottom line. No matter what I did, I was stuck. I had no idea how I was winning. I had no idea how to duplicate my wins. When I lost, I had no idea why I lost, and I had no idea how to mitigate my losses. And every single week I would show up and Jim would give me the latest, greatest pick, and I would move my money from this to that. But I felt stuck. It was just a much bigger roller coaster than in the 401k. The bigger bets, bigger ups, bigger downs, but still no control. My friends, at the core of everything that we're talking about today is control. Financial freedom is a function of predictability. It's a function of next month, will your assets produce the required income for you, instead of next month, what's gonna happen with Bitcoin or with Apple or with Tesla, and will that determine, make or break your ability to stay retired? My friends, this is not gambling. It's actually a pretty simple approach. When you align your money with a principle, the principle gets you a result. And when you get off track and your results reflect you being off track, it's a simple matter of understanding how you deviated from the principle and realigning with that principle. So my friends, here you have learned the principle of wealth. The principle of wealth is dollars follow value. If you're not creating value when you invest, then dollars won't follow you for very long. This dude right here, Jim Cramer, his value is entertainment. Not financial picking, not helping you retire, it's entertainment. If you like being entertained, subscribe to this man all day long. If you want to retire in 10 years or less, shut this noise off and follow a principle-based approach. Join me on the next video where I'll share what those principles might actually be and how you can use them to take control over your finances and stop gambling for good.